Oh man, so we've got three things set to reject Bitcoin yet again from the 20,300 level. As you can see on the chart, Bitcoin is getting rejected intraday here by the white line set at 20,300. We've also got the dollar index bouncing from a critical level. We've also got the US 10-year showing great strength. And the third thing we're going to be walking through is the fact that the non-farm payrolls come out in less than 24 hours. All three things going against Bitcoin, making it very difficult for it to break through this key level. Guys, don't forget to smash the like button. Don't forget to subscribe. As always, check out the links below to BYBIT and BitGet if you want to trade any of these moves. And as you can see, Bitcoin is in a bit of a bother at this point. It's trying its best to break past this 20,300 level. You can see that here on the daily chart. Intraday today, you can see the wick on this candle. We're fighting to just keep this candle even green after getting rejected from that level. If I zoom down slightly to the 4-hourly chart, you can see a little bit more granularity of what happens. We've created a double top pattern. A double top pattern here, getting rejected not just once, coming back down, getting rejected again. And now the risk is, are we going to complete that M pattern, come down to the neckline, and therefore start heading your way to the downside? The neckline here would be about here at 20,000 neckline, which we know is a very, very important level for Bitcoin, where that green line is as well. So there are three key things which are allowing this to happen, which is creating this weakness in the Bitcoin chart. And we're going to walk through each of these. But before I do that, I quickly want to talk about the OPEC meeting yesterday. We spoke about this with member live streams yesterday, those on the member lives, and this is a huge catalyst right now. As you can see, OPEC have reduced their number of barrels they're going to be producing by 2 million barrels a day. To put that into context, what that then means is the US currently are having to dig into their reserves, and they're going to have to continue to dig into their reserves. They've already depleted their reserves from around the 725 million barrels to just there above 350 million. So the current rate of giving out an extra million from their reserves a day, they've only got a year or so before they deplete their reserves. And they don't want to deplete their reserves, right? They want to keep their reserves back at some of these levels in which they had it. So this is a huge problem in terms of inflation as well. We can see oil prices climbing to the upside, and definitely something we want to monitor. But that's not in my top three today. The first thing I want to cover off is tomorrow's non-farm payrolls. Tomorrow's non-farm payrolls. Why is it so important? Well, we had the ADP private job role figure come out yesterday. That has shown that labor market continues to remain strong. So Jerome Powell will be looking at that thinking, oh, I can continue to increase rates because the labor market is not weakening yet. So we need to find out from the non-farm payrolls tomorrow whether that's the case. Last month, it came in at 315,000 new jobs. The consensus this time is around the 250,000. But I'm just worried here that we're going to get a beat above this 250,000 level, and market's going to be like, oh no, the labor market's too strong, and Jerome Powell can continue to hike rates. As we can see here, most of the market, 70% of the market, are still pricing in 75 basis point rate hike. That's interesting given the UN comments we had earlier this week telling central bankers to stop increasing rates with fear of, damaging the world economy. So it's interesting the market still thinks Jerome Powell's going to go ahead with his big 75 basis point rate hike on November the 2nd. Now, the other thing we want to monitor is this. It's the US 10-year Treasury, and it's showing some strength. I'm going to pop over to the proper chart here so we can take a quick look here. Look at this. The US 10-year Treasury on this 4-hourly chart is showing some strength. And more importantly, it's reclaimed its 4-hourly EMA ribbon. This continues to be bad for Bitcoin. As this climbs, this shows people are rotating into risk-off assets away from high-growth risk stocks, such as those on the NASDAQ, and moving across into the safety of the dollar and the US 10-year. Now, that is further illustrated by the dollar index. The dollar index is now on this 4-hourly candle, as the time of this recording, is 1 hour away from reclaiming its 4-hourly EMA ribbon. And this is what I always warned of. I said, look, guys, by the time we have these movements to the downside, Bitcoin can do well. But when you zoom over to the daily chart, that is all it is. Those arrows I just drew, it's just a retracement into the daily EMA ribbon, and the dollar index is bouncing back with vengeance so far. Two really strong daily candles being printed here for the dollar index, adding further struggle, further pain to Bitcoin, which is trying to break from that key level. So as you can see here on Bitcoin, running into its EMA ribbon here on the daily and set to get rejected. But a rejection is not the end of the world. I'm going to explain why here, because from a technical perspective, this is not a macro perspective, from a technical perspective, what we are creating here, or what we can create, is a triangle, right? So we can have this ascending triangle. So if I zoom down to the 4-hourly chart, as long as we get rejected from here, we can even create the M pattern, and you guys can trade that if you want to trade that to the downside. As long as you create a higher low and start doing something like this, then you're okay, because you got this low, got this low, and you can start forming yourself into a triangle pattern. Okay, we can start entering this triangle pattern and try breaking this to the upside. So that's something for us to monitor here on Bitcoin. But for now, it doesn't look like we've got enough strength to really just break through this first time. I mean, if we also bring out on the daily chart our Bollinger Band, I will show you also what's happening here on the Bollinger Band. And what you can see here is we're coming right to the top of our Bollinger Band, which normally acts as resistance. You can see we're getting rejected here from the top of our Bollinger Band, which suggests we could be coming back to the middle line around that 19,400 range. That works with this upper trend line, right? That could also work with the fact that we're coming back down here, we collect a retest here, and we start trying to build our way back up. That's what we're looking at here for Bitcoin. But the wider market continues to show that there's a lot of struggle in the market. There's a lot going on that the market is trying to digest. And if you want to reflect on that, you can just take a look here at the US market now slipping after a very strong Monday and Tuesday. Monday and Tuesday come out really strong. That was the biggest two-day gains we've seen on the equity market since 2020. Right? Really powerful, strong 2 days. And a lot of people were expecting October to be really positive. But you can see we slipped yesterday and we seem to be slipping today. Volatility is still high. You can see the VIX index is sitting at 3.22. So there's a lot of opportunities to take intraday trades, but the overall sentiment of the market is still worried around what is going on. There's still tensions around the UK. There's tensions around the Russia-Ukraine war. Now you've got this OPEC issue as well. You've got the Nonfarm Payrolls coming out tomorrow. People are unsure if Jerome Powell is going to pivot or if he's going to continue with his 75 basis point rate hike. There's a lot going on for markets to digest. But one thing you can see is fear and greed index is sitting at 26. So markets are starting to feel that we're getting used to this level. So in order to shake out these strong diamond handers right now, Bitcoin will have to tank. It'd have to fall down to those kind of 17,600 levels, in my personal opinion, to shake out these holders, because these holders have diamond hands. We saw the weak hands leave in the first fall. When we first fell back down, let me just show you this. So when we first capitulated all the way down to 17,600 earlier in June and after the Terra Luna crash, etc., we saw a bunch of capitulation. You saw a bunch of people selling their Bitcoin. But the ones who are holding here now since then are much more diamond handers. You're going to need a worse capitulation down to the downside, 17,600, maybe down to 16,200 range in order to shake them out. So if market manipulators are looking for a final shakeout, they're going to have to send the price back down here. Now, one worrying sign I do want to share with you is I don't feel comfortable us testing this 18,700 level again, right? We've tested it here, we tested it here, we tested it here, and we managed to build some strength and get ourselves back up here. But if we revisit that level again, remember, it's like a glass floor. Support levels is like glass. The more times you tread on it in your steel cap boots, the more likely it is to break to the downside. So it's not comfortable if we have to go revisit that again. Ideally, we just want to build some strength, try to get out of this pattern and quickly get ourselves past 22,000. That is going to be the important level here beyond 22,000. Now, what am I doing in the market? I'm staying put right now. I'm not doing much here in this market. It's neither too red for me, nor is it too green for me to do anything. So I'm just sitting back, letting it play out. If we see lower price points, by that, I mean back down to that kind of 18,700 level, I'll start to nibble again. But right now, I'm pausing. I've had plenty of time to accumulate. If I didn't have a position at all, what amazing time to still be buying Bitcoin, right? At this 20,000 level. You've been at this level for a very long time now. And these are crazy prices when you put things into perspective of how far you would have to go back in order to see some of these prices. I mean, if we pop this onto the weekly chart, you're talking about price points last seen here from the 2017 end of the bull run, right? Up at 20,000. So you're getting amazing opportunities which were last seen 5 years ago here on crypto. So when you zoom out, it's like, it's a great opportunity, but obviously when you're stuck in it day to day, it's a really painful, long bear market. Now, the worrying thing for me, which I want to spend some time talking about, is this fear of a bigger, deeper recession. And I know it's not a popular opinion, but this is something I'm starting to mentally prepare myself for. I always want to prepare for something that is further ahead. So I don't want to jump the gun, but at the same time, I want to be prepared for something that people aren't just talking about yet. There's no harm in being prepared. So nobody wanted to talk about this bear market. From November last year, nobody wanted to admit it. They're like, no, it's a super cycle. We're going to continue our way to the upside. But when you look at the cold, hard facts, we've now been in a year of a very depressed market. And now we want to ask ourselves, okay, the bull case is that by Q1 next year, maximum Q2, Jerome Powell starts pivoting and we can work our way back up and liquidity starts to re-enter the market. But what if it doesn't? What if we do start heading into a financial crisis? What if Bitcoin prices do go lower and stay there for a period of time? Or even if they stay at this kind of 18 to 20,000 range for a very long period of time, what are we going to be doing? And that's what I'm starting to train my mind to be prepared on. We saw the fears around Credit Suisse. No doubt we saw the fears of UK and how the pension funds were just literally hours. I mean, I can show you this here. Let's take a look at this. I mean, pension funds were hours, if not days, here, hours away from disaster. Bank of England says pension funds were hours from disaster before it intervened. So anybody who thinks that the world economy is suddenly in this comfortable position, you've got to reevaluate. We are not far off a really messy, sticky situation. If central bankers cannot navigate this properly, we could be in a horrible bunch of pain. And I was around in 2008. I saw that financial crisis. I saw how it creeped up on us. And then suddenly everybody was shocked when huge banks were showing that they had issues. Their balance sheets were not safe. Mortgage crisis for individuals. And I'm just worried when I look at the mix of the cocktail going on. It's a really bad recipe. And the worrying thing is we've gone from a situation where we had, the pandemic to now actually being in a deep recession, which could then turn into a depression and financial crisis. And that's what's worrying right now. So definitely something I want to be prepared for, get myself mentally prepared for a longer period of downturn. Now, if that doesn't happen to be the case and we just rotate back up and head to the upside, then fantastic. That's great. My position is allocated and I'm perfectly ready for another bull run. But what people don't do is they oftentimes try to ignore the scenario that they're not prepared for. So I hugely urge you guys to, the scenario that you think is unlikely to happen, spend time preparing for that just in case it does happen. Because your biases will make you prepared for one direction and not the other. If you generally have a short bias towards Bitcoin, you'll be prepared for the downside. Like, oh, Bitcoin's going to 10,000, don't worry guys, it's going to 8,000, and you're going to get shocked by the move to the upside. Now, if you're the opposite and you're a Bitcoin maximalist, you're always preparing for the upside and you're never preparing for the downside. So find out what your bias is, find out what your weakness is, and spend disproportionate amount of time focused around that. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. If you want to join our course member live streams where I share these kinds of insights, then check out the link in the description, ijaz.uk/member. Go watch this video here, and I'll see you in the next one.